Hello traders, welcome back to the channel. In today's video, I'm going to break down how to identify the draw on liquidity. By the end of this video, you'll be able to spot the draw on liquidity much more easily than ever before. The best part? This method does not require you to switch between multiple timeframes or constantly align higher timeframe and lower timeframe. All you need is a basic understanding of market structure, and you'll be able to see where price is most likely to draw toward. So, what exactly is draw on liquidity? Draw on liquidity simply means identifying the expected direction of the market. In simple terms, it tells you whether price is more likely to hunt liquidity above, which means the market will be bullish, or below, which means market will be bearish. You don't need to predict the entire day's movement to be profitable. All you need is to catch high probability moves with a solid risk to reward ratio. Still, if you want to understand the full daily direction, it is possible. The methods I'm going to teach you will help you do that. Just remember, it takes practice to properly read market structure and price delivery. By the end of this video, you'll be able to identify the draw on liquidity and find high probability setups much more confidently, just like in the example shown here. Alright, now let me explain the concepts we'll use to identify the draw on liquidity. First, we'll use the premium and discount tool. You can see my settings for the tool, and you can screenshot it to match your tool exactly the same. Second, we'll use PD array like fair value gaps or order blocks, but you can use any PD array that you are comfortable with. Third, we'll use liquidity sweeps. But don't take this the wrong way. I'm not telling you to predict any liquidity sweep. We will only use liquidity that has already been swept by the market. Now let's go to the charts, and let me show you exactly what you need to do to identify the draw on liquidity. So, coming onto the charts, we'll be using the 15-minute time frame only. The first thing we need is a liquidity sweep. We have this low, and we simply wait for the market to take it out. Once the market sweeps the low, a new swing low forms after the sweep, and we also have a swing high. Now we take our premium discount tool from this high down to the new swing low. Next, we will mark the PD array that lies inside the premium range. In this case, we have a fair value gap, which becomes our point of interest for short opportunities. As you can see, the market taps this fair value gap perfectly and delivers a massive move to the downside. Now ask yourself, do you really need to find the entire daily range to be profitable? Not at all. You just need to use simple concepts and avoid overcomplicating the process. And as you can see, this method works. After that downside move, we now have a new low and a high, so again, we'll apply the premium discount tool. Why are we using this specific low? Because this low is the one that swept liquidity, and that makes it meaningful. From here, we mark the fair value gap that lies inside the discount range. Now we know the market can trade upwards from this bullish fair value gap, but the next step is identifying how far it can go. To figure that out, we once again use the premium discount tool, this time from the old high down to the new low. And look at that! We have another fair value gap sitting in the premium level, so we mark that as well. Now we have a clear expectation. The market is likely to move from the bullish FVG in discount up into the bearish FVG in premium. And let's see what happens. Price moves exactly from our bullish gap straight into the bearish gap we marked above. Now let's see how our bearish fair value gap reacts, and whether it plays out as expected. So as you can see, both of our levels worked perfectly. Both zones worked perfectly. Now ask yourself, don't you think you can trade within these levels alone? Is it really necessary to jump to the daily, the 4-hour, then the weekly time frame? Stop overcomplicating trading. Use this simple approach and keep it clean. Now let's move forward. After that move, we get a market structure shift to the downside. So once again, we'll use the premium discount tool from that high down to this low. Why are we choosing this specific high? Because that high is the one that swept a liquidity level, which makes it the valid point for our measurement. Now you can see we have an order block sitting in the premium level, so we'll mark it out. This makes it a perfect area for short opportunities. Since we expect price to trade back into that order block, it becomes our draw on liquidity. Now we have that order block in the premium level, so we expect the market to move up toward that order block. The question is, how do we find long opportunities toward our draw on liquidity? To do that, we take the premium discount tool from the low up to this new high. We have an order block in the discount range, so we mark it, and as you can see, the market moves exactly to our order block in the premium level. That gave us a clean short opportunity. You can see we have a good move to downside from this order block, and now we know it will go to the sell side liquidity. Now look at this. We have a high that swept buy side liquidity and a low that swept sell side liquidity. So once again, we take our premium discount tool from this high down to this low. We have another order block in the premium range, so we mark it for short setups. Price touches the order block and drops straight to the downside. Once again, both of our levels worked perfectly. Now I think you clearly understand how to identify the draw on liquidity. Just think about it. If you focus only on these key levels, do you really need top-down analysis or higher time frame alignment? You can keep it this simple and still catch amazing moves with solid risk to reward just by following this approach. Price is fractal, and when this method works, it naturally gives you the day's direction. But honestly, you don't even need the entire daily bias when these setups themselves are enough. Thanks for watching. If you want to learn directly with me, join my Telegram and Discord server and drop a message in the chat.